E 8.4. At the beginning of the current period, Co. Limited had balances in accounts receivable of 200,000 and in allowance for doubtful accounts of 9,000 credit. During the period, it had net credit sales of 800,000 and collections of 700,063. It wrote off as uncollectible accounts receivable of 7,300. However, a 3,100 account previously written off as uncollectible was recovered before the end of the current period. Uncollectible accounts are estimated to a total of 25,000 at the end of the period. Omit cost of goods sold entries. Let's do one by one. Instructions. Prepare the entries to record sales and collections during the period. Okay. All right, so what I see is that in the question, we actually have a lot of numbers. So what I like to do is to divide and use color to differentiate them. So for example, here we had balances in accounts receivable of 200,000. We had balance in allowance for doubtful accounts of 9,000 credit. And then we had net sales of 800,000. And we had collections of 763. What else? We wrote off as uncollectible 7,300, but we actually recovered some of that money. We recovered 3,100. What else do we have? We have that uncollectible amounts are estimated in 25,000. Okay, these are the numbers that we're dealing with, right? Number A, letter A, wants us to record sales and collections. So we are actually just going to be doing this part, right? Net credit sales and collections. So for now, we don't need to mind the other numbers. First, let's record the net credit sales. So here I'm going to write credit sale. And it had net credit sales of 800,000. That means that we're going to have accounts receivable and sales revenue because I got this money because of a sale that I made, right? Because of a service that I performed. Okay, so this is going to be 800,000 and this is going to be 800,000 as well because this was a credit sale. That means that I didn't get any money. I just made that sale on account. So this is my credit sale. And we also had the collection, right? So here I'm going to write the collection. How much money did I actually get? I actually got $763,000 in cash. So here I can write cash and I can write accounts receivable. Accounts receivable is in the bottom because I am reducing the accounts receivable, right? Because originally I had this money that was due to me, but since I got this money now in form of cash, I have to reduce my accounts receivable. So accounts receivable is a plus and a minus. Since it is here on the credit side, it is a minus. Okay, and this is letter A. Letter B. What does it says? Prepare the entry to record the write-off of uncollectible accounts during the period. Here they say something about write-off, right? Okay, here it said it wrote off as uncollectible accounts receivable 7,300. Every time you say write-off, like it wrote off something, it's basically like you're saying, okay, we give up. Like, okay, we're not gonna get this money anymore, so let me just write it off that I am giving up this money. Like I know that this person, this customer that I sold something is not going to pay me anymore, so I have to write this down. I have to write it off. So they want us to write the write-off entry. So here I'm going to have write-off, and we are going to have what? We are going to have allowance for doubtful accounts. Make sure that you write the full name, okay? I'm writing like this for just to save a little bit of time and space. And here we're going to have accounts receivable. And how much is that? It wrote off what? It wrote off 7,300, right? This is the standard write-off entry that you're going to make. Something important, like why is allowance for doubtful accounts here and accounts receivable is here? Accounts receivable, it's here. That's easy, right? Because accounts receivable, it's a plus and a minus. Since it is on the credit position, it is a minus. So I am reducing my accounts receivable because I know that this person is not going to pay me anymore. So I have to receive the money that I think I'm going to get. I have to reduce the accounts receivable value. But for the allowance of doubtful accounts, it is a contra accounts receivable account. What does that mean? It means that allowance for doubtful account is actually a minus and a plus, which means that here, since I have it on this position, it is on the minus position, which means that I am deducting this money from my allowance of doubtful accounts. Why is that? What is an allowance? Allowance is kind of like a money that you keep in order for you to use somewhere for something, right? Allowance for doubtful account is pretty much the money that you keep in order to use when you know that somebody is not going to pay you anymore. So you have this money like somewhere, right? And so this is why I'm going to reduce this allowance for doubtful accounts, because here I know that this person is not going to pay me anymore. So I'm going to take that money away from allowance of doubtful accounts. And this is why we are reducing it here. That's why it is on the debit position. Let's see letter C. Prepare the entries to record the recovery of the uncollectible account during the period. Okay, what does a recovery means? A recovery is kind of like after you wrote off something, after you said, okay, I give up, this person is not going to give me this money anymore, you realize that the person somehow actually gave you this money. Maybe not the full amount, but at least she gave you something. So this is why you have to recover from this entry over here. So how do we recover? We have to do two things in order to recover. Since this entry is actually not necessarily going to happen entirely, what we are going to do is we are going to switch this entry in order to cancel it. And how do we cancel it? We basically just write the same accounts, but in the opposite position in order to cancel the amounts that were credited or debited before. So I just switched the position, but something that you have to be careful here is that here the values, you don't necessarily are going to put the same values here. Why? Because maybe the person, when she gave you the money, she didn't necessarily give you the amount in full, right? Like for example, let's see. It wrote off as uncollectible accounts receivable. However, a 3,100 account previously written off as uncollectible was recovered. You see, the original amount was 7,300, but this person just paid me 3,100, which means that I'm actually just going to cancel 3,100. And since I actually got this money now, I'm just going to record the regular collection of the money because this person actually paid me and it paid me in cash. So we're going to have cash and accounts receivable. Accounts receivable in the bottom, again, because before I was expecting to get this money, now I'm not expecting it to get anymore. So I have to reduce it. D. Prepare the entry to record bad debt expense for the period. Okay, every time you see these keywords here, record bad debt expense, that means two things. First thing is that to record bad debt expense, you have to make an adjusting entry. So every time you see this, that means that the entry that you're going to be making is an adjusting entry. The second thing that it means is that you actually have to make a T account for allowance for doubtful accounts. So here I'm making the T account like this. And allowance for doubtful accounts, what I like to do is to always put the signs here in order for me to remember it is a minus and a plus. So let's see, what was the beginning balance of allowance of doubtful accounts? It says here, right? It had balances in accounts receivable 200,000 and allowance for doubtful accounts of 9,000 credit. 9,000 credit. This is the credit side, right? So the beginning balance is 9,000. So I'm going to put it here. And it also says what is the estimated amount at the end. Uncollectible amounts are estimated of 25,000 at the end of the period. If it doesn't say anything, that means that it is a positive balance, so which means that I'm going to have the 25,000 here. What we are looking for is the bad debt expense, right? So basically what we're looking for is the difference that is going to be here. But we have to be careful because this is the T account for allowance of doubtful accounts. And maybe there have been changes in allowance of doubtful accounts before, right? Like for example, do you see? Here, I have one, I have another one, right? So I have to add these values here in my T account. So let's see. The first one, what is the first change that I made? Here I debited 7,300. So I'm going to debit 7,300. What else did I do? Here I credited 3,100. So I'm going to credit 3,100. And I think that's it, right? Yeah, that's it. Okay, now what do? We're going to add each side alone. So here on the left side, there's nothing to add, so we're just going to have 7,300. On the right side, we had two numbers, so I'm going to add 9,000 plus 3,100, and we have 12,100. Okay, now what's the logic here? All of these numbers added, they have to become 25,000, right? But if you add them, if you do 7,300 plus 11,100, you're actually going to get, you're actually going to get 19,400. But the number is supposed to be 25,000, right? Which means that we're actually missing. We have to add something in order to become 25,000. So the number that we're looking is on this side. And I like to call it X. This X is the bad debt expense that we are actually looking for. So what I like to do is to use some algebra here. This side is the negative side. It is the debit side. So we're going to have minus 7,300 plus everything that it is on the credit side, which in this case is a positive. You could add 9,000 and 3,100, but since I already added them up, I'm just going to say 12,100 plus X, of course, which is what I'm trying to figure it out, equals 25,000. Okay, 4,100, 800 plus X equals 25,000. It's going to be 20,000, 2,000. Yeah. And this value, ladies and gentlemen, it is your bad debts expense. So the adjusting entry that you are going to make is going to be over here, bad debt expense and allowance for doubtful accounts. And you just use the value that you just figured out over here, like this. Okay, good. Let's see letter E. Determine the ending balances in accounts receivable and allowance for doubtful accounts. Allowance for doubtful accounts, we don't need to do it because we just did it, right? This is the ending balance of allowance for doubtful accounts, so you don't need to do it. But for accounts receivable, you do need to do it. And you're going to make a T account, just like you did it before, for accounts receivable. The process is very similar. It's just that we're not going to find this now. We don't need to find anything now. We already have all the numbers. So what is the beginning balance for accounts receivable? It had 200,000. If it doesn't say anything, it is a positive. Oh yeah, something very important. For allowance for doubtful accounts, it is a minus and a plus, right? But accounts receivable, it's a positive and a negative. Increases are on the debit side, the decreases are on the credit side, which means that the beginning balance is 200,000 and it has to be on this side, right? Because just like I said, if it doesn't say anything, that means that your beginning balance is positive. Then same thing, we need to check of the things that we added or we subtracted for accounts receivable. For example, here I debited 800,000, so I'm going to debit 800,000 on the debit side. What else did I do? I credited 763,000. I credited 7,300. Debit of 3,100. credit of 3,100. I think that's it. Is there any other credit? No, that's it, right? Okay. All right. So here we just want to know how much is that? If we add all this up, what is my ending balance, either here or here? Same thing. We add each side at a different time. So here we're going to have about 1,03,100, and here how much is that? Yeah, that is 773,400. Okay, again, so if here I have 1,003,100 and here I have 773,400, that means that I'm going to have more on this side, right? Simply because this number is bigger. So I'm just going to subtract this from this. Just see how much is that. So and that is 225,700. This is my ending balance for the accounts receivable. Okay. I think this is the last one for this one. F. What is the net realizable value of the receivables at the end of the period? Okay. You may hear net realizable value or cash realizable value. They mean the same thing. And what it means, it is your ending accounts receivable, which means your ending balance for accounts receivable, which in our case is this one, right? And this is going to be minus your ending balance for the T account of allowance of doubtful accounts. This is the formula. So in our case, the NRV is going to be the ending accounts receivable, 229,700, minus the ending balance of my allowance of doubtful accounts, 25,000. And that is 204,700.